Welcome to Charts This Week. My name's David Linton. I run Updata, and we're going to take a look at stocks. We're going to pay a lot of attention to cloud charts. Of course, my book's out now. A lot of you have been reading it over the weekend and giving me great feedback. Lots of emails in this morning. I'm very, very grateful to all of you who've taken the trouble to tell me about the book and how you're enjoying it. So I'm very, very grateful to read all these comments. Keep them coming. So here we look at the S&P 500 index. This is bullish on the cloud. Of course, if you've read the book by now, this is becoming second nature to you in terms of how you interpret the cloud. We had a cross of the cloud back in 2009, which was our bullish signal on the market. We've been bullish ever since. We had a temporary breach just in January, February time when we did poke through the cloud. In the book, we do tell you how to deal with these temporary breaches. It's quite key. How long should you wait? How do you know what to do when you've got this temporary breach? And that's a very key aspect of reading cloud charts. But at the moment we're bullish, and we wouldn't be bearish on the daily chart unless we fell back through the 1100 level. Now that's quite key, and we are holding on to that level. So really, the market is looking pretty bullish. It's really hard to believe. You may not like it, but the fact is we have crossed the cloud on both the daily and the weekly. Here we see on the weekly that we crossed the cloud in sort of late 2009. Remember, it's the price translated back to the lagging line. We're making new highs now, which is also a bullish sign. We pay attention to all of the normal chart patterns and Dow theory that we would use, which I do highlight in part 1 of the book. And here we see that we've crossed the cloud, and now we are definitely in bullish territory. Remember, this chart has only given 4 signals in the last 20 years. Sell in 2000, buy in 2003, sell in 2007, early 2008, buy in 2009, 2010. It's only given those 4 signals, and consequently you've been the right side of the market every time. So this is our roadmap for stock markets. And here we see that we are breaking to new highs. So really we're in the bullish zone. It's quite hard for a lot of people to accept, having run so much in the last year, but we are in the bull zone on the markets. A lot of people are wanting to sell in May and go away, but what we do see here is that we had the sell in January, we came back, we had the buy in February, and we've been bullish ever since on the alley. So you didn't actually have to wait for the market to break to new highs. This is the really big advantage of the clouds. It gave you an earlier signal to buy, and we've been running up the cloud ever since. And here we see that we'd now have to fall through about 1150, which was the previous resistance level. That's now becoming support, and that's cloud support as well. So you can run this bullish run short term. The cloud is in the bullish zone. You can't ignore the fact that we are above the cloud. If we go to the 5-minute chart, if some of you are trading E-minis and shorter term still, here we see that the cloud is a lot more congested because we have a little bit noise, but we do have a little bit of a bearish period on the very short term time frame. This chart's changing very, very quickly, of course, and you need to resolve which cloud you use for which time horizon. There's a whole chapter in the book on time horizon, so that's really quite key. And then we get to the daily chart on the S&P, and we see here that the on-balance volume is confirming the new high with a new high in volume. So it is volume driven, this buying. A lot of people have been saying there's no volume behind it. That's not true. The on-balance volume chart is showing this on the up days. We are seeing volume, and we're making new highs. So no divergence on the volume there, which we are seeing on oil, for example, but not on the stock market. And then if we look at a seasonality, this is really telling us what happens to the stock market at the various times of year. And this is weighted towards the more recent years, but over the last 10 years, here we see that in fact March, April, May have been relatively good months over the last 10 years. June, July, August are not great, and really the market has tended to sell more heavily in the last 10 years in September, October time. So the sell in May and go away theory may come in this year, but there's no evidence to suggest in the last 10 years that it has been a great strategy to use. If we get to the FTSE, we have a similar picture on the daily chart. We're bullish, breaking to new highs. In fact, the FTSE on the weekly gave the signal middle of last year that we're in buy zone. You had the sell over here at about 6,200. You had the buy at about 5,000. It was late because of the depth of this fall that we had in 2008. We did take longer to give the signal, but it's bullish. And then if we get to the 60-minute chart on FTSE, Very similar to the S&P. Here we see the buy in February. That level was given at about 5,150. That was your buy point. You didn't have to wait for the new high, and it's been running up ever since. And so we now need to fall through about 5,650 on FTSE on the 60-minute chart for a short-term sell signal. And then if we look at the DAX, this is the 60-minute chart. 6050 is our level. Just reading the base of the clouds. I mean, if you've read the book, you'll know by now that these clouds are fantastic at just telling you immediately where the support and resistance levels are. It's really great. And here we look at the Nikkei breaking just now, just nudging to new highs. So the Nikkei is a bit later than the other markets, but we do see again we have got a bullish area where we're above the cloud on the Nikkei. The weekly on the Nikkei is looking quite interesting. We are breaking into new territory there, so that's quite an interesting one. But then if we look at the long term, this is the monthly chart, we are still bearish on the Nikkei. We've seen a lot of false dawns, and really long term we'd want to be back above the 15,000 mark on the Nikkei to be really long term bullish. But short term and medium term, that does look interesting. And here we see the 60-minute chart. You've got your buy in February, and we've been running ever since. 10.8 is the level on the Nikkei at the moment. And of course, a lot of you ask for stocks. The great thing is that you can scan for cloud crosses. It's really simple. And in the Nikkei 250 at the moment, there's about 10 charts that are giving cloud crosses. And in fact, in the book, we show you the scanning in the appendix. We've done the US stocks that are all crossing their weekly charts. These are some of the Japanese ones crossing their weekly charts. So Mitsubishi has just crossed, quite an interesting chart there. And if we look at the next one, Fujitsu just crossed again, so not quite as good as that Mitsubishi one. Sony, here we see that Sony is just crossing the cloud on the weekly, so this is just starting to turn bullish. And then we can see the same for Ricoh. There are two in the FTSE 100 that are crossing, for example. These scans just run in minutes, so you want to try the scanning, and remember, this is a great way to find the stocks that are just turning bullish. So here we go. That's it for this week. Remember, I'm always happy to cover any stocks you want. Please read the book, and I'm grateful to all of you who have been providing me with great feedback and how you're enjoying it. So that's it for this week. Until next week, happy charting. See you then.